Hello, my friends. Welcome to episode 19 of Learn TA with Landy. Landy is going to teach us about how to gauge strength and weakness. Make sure you share out the stream. It's on that side. Make sure you share out the stream. It's very important. If you have any questions about what Landy's going over, drop your questions in the live chat. We'll answer them live for you. So this is an opportunity for you guys to really pay attention and learn more about TA. And if you don't learn about TA, well, then you will get wrecked. And with that, I'm going to bring on our awesome friend, Crypto Landy. How are you doing today, my brother?
I am doing fantastic, Peace. It's always great to see you and join you here on a fine Tuesday morning still from the West Coast. We came on a little bit later today, but we're actually going to be running a little bit of a shorter show because this is fairly simple to understand, and it relates entirely to volatility, to show kind of the strength and dare I say length of time for the move. But this is kind of where we're going to evaluate strength and weakness in certain areas, and we're going to incorporate volatility, two of the bigger metrics, kind of on the support and resistance and volatility side of things for technical analysis, and kind of hone in on where we left off in terms of our areas of interest last week and kind of the setups for kind of evaluating where things could go based on conditions. So I think this is going to be a fun one.
Interesting. Yeah, I'm ready for it. I want to know. So I'm assuming that a lot of this has to do with the momentum indicator, but I don't know. So I want to wait and see.
Yeah, we're going to get there. It does incorporate all the pieces, but definitely we will be touching on trend and momentum. And obviously the way that I've been teaching everybody this is the 4 key pillars that underpin every single system. Doesn't matter what kind of a system it is. There's plenty of different systems and theories, and whether it's Elliott wave theory or Gann theory or Wyckoff theory or name any number of other theories out there. Everything that underpins it is always going to be trend, support and resistance, volatility, and momentum. When you understand those 4 keys, you can then relate those particular subjects of or domains of knowledge to a system and how that system utilizes it. So we're gonna still keep it high level, fairly simple and straightforward. And yeah, let's go ahead and just jump right into it.
All right, let's get the chart up here.
Beautiful.
We want it like this. There we go.
Yeah, and this is where I think things, often we get a nice move off the lows. Bitcoin is up 42%, from low to high here. And, a lot of people are looking around going, well, is it over? Right? We had nice 3 nice pushes up. Is this it? Are we running out of momentum or strength on this move? And there's a few different ways in which we can evaluate this, and most jump right to momentum. And I want to show something here real quick regarding momentum and how it can be a little misleading. We have 2 momentum-based indicators. We have the relative strength, and I do put RSI or relative strength index in the momentum category. And then we have a regular Stoke. Now, I often get the question, why do you not use Stoke RSI? Everyone uses Stoke RSI. Well, we already are looking at RSI. I don't need an indicator of an indicator. And what a Stoke RSI would be just fine if I wasn't already going to be referencing RSI. In many, you'll see combine, and it's just stacking. It's just another look at the same thing, as Stoke RSI is the velocity or the speed of the RSI. In this case, we don't need that, so we're looking at a regular Stoke down there. But let's start with RSI here. And you can see that, we have a nice uptrend on RSI, matching our nice uptrend on Bitcoin, right? And then there's divergences, right? We've talked a little bit about this, and we might dive further into this as well. But I can tell you right now, there are no divergences on this particular move up. There are historical divergences, but the most important divergences are going to be within the uptrending move here. Just like on the way down, the divergences were building on the lows, right? As we were getting lower lows, but higher lows on relative strength. That's where we were seeing bullish divergence build up. And on the other side here, we have really at this particular moment, we don't have any bearish divergences building on this particular move. And I just turned on the indicators, reference for some of those divergences. Even though there was technically more divergences, it doesn't pick them all up. It's all about how far is it looking back, or how many candles is it reading back. In this case, there is no in-trend bearish divergence just yet. We do have a pretty high RSI read. It's in the bullish control zone around 71%. And then, of course, we have a momentum indicator where there is divergence here, where we're threatening a lower high on a regular Stochh, which measures close over close price action here. And this can, this can often lead people to go, well, obviously this is going to be the top, right? And that's where we have to actually gauge a few other very important things for the strength of this move. And we can see that relative strength is still very strong. It hasn't put in a divergence yet. Momentum's given us a little bit of mixed signals, so it's kind of complicating the picture. And at the end of the day, what we're seeing is a move off of the lows, consolidation, a move off of a very key level, consolidation, a move off of another key level to a key level. So this is where we have to kind of pull in our support and resistance zones. One of the things that I really like to do is on an uptrending move like this in a macro uptrending environment like the monthly. So I'm going to walk you through the thesis here. This is an uptrend on the monthly. All right. There is no broken trend. This is a bull market. We saw the bulls run to the prior all-time high and slightly above right here with the 73.835 high. And then we got a nice consolidation, a nice higher low, and then the bulls ran, right? Why were they running? Well, there was no reference for overhead resistance. Now we do have this after this correction. Will they go on a run again? Now, when we're looking at the strength of this is a nice healthy uptrend. And we can start to say, okay, well, it's a nice healthy uptrend. And realistically, there's only some overhead resistance and now some downside supports to be aware of. So the big areas to be aware of on the chart here are from the close down here to the closing higher low on the monthly. So there's that area. And then there is the prior closing all-time high to the all-time high up here. So we're just in between two big zones within the context of this trend, right? And we've encompassed the swing highs and the swing lows in this area. So we can now go ahead and mark that out. And we now have a nice reference for the areas of interest, right? And we understand the trend. Now, when we go and we add on, we've got trend, we've got support and resistance zones of interest, and then we add on a volatility metric. Of course, this is the Landy bands, the free indicator that's up in the upper left-hand corner of your screen, and is linked in my profile, usually posted underneath some of these posts as well. This is a free indicator. You're not buying anything. This is a triple Bollinger Band set. And we can see, well, what is the strength? If evaluating strength, we can see that Bitcoin is above this basis band. Now, this is a moving average. It's the 20 simple moving average. And then we have the first, second, and third standard deviations to the upside, and the first, second, and third standard deviations to the downside away from that. And we're not going to get into the math behind standard deviations, but if you'd like in the future, if there's enough people to ask, we can get into the actual math, but you can also just look up the math behind how standard deviation calculations work. It's very simple math. But when we start to look at the strength, we essentially have the bullish half of the bands and the bearish half of the bands. So when I'm looking at strength in this case, we're seeing that Bitcoin is in an uptrend. It just put in a nice or threatening to actually close a higher low by the end of the month. It's still, we're right around midpoint of the month here. But, we did solidify this higher low swing last month. So we've solidified the swing at 74, 420, 69. Because the market is a meme. By the way, traditional markets do this a lot with the 420s and the 69s. And we did not get a close above the 95, 128 coming into this monthly candle of May. But, if things hold up above there, this is going to set another higher low in the context of being in the strong half of the Bollinger Bands and even more strong above that upper first standard deviation. So we would say that this is strong. We can also look at a few other things here. We can look at RSI is still in the bullish control zone here, indicating strength. And we do have a bearish divergence that did play out in the context of a correction. So from the 73,835 to the 109,360 high, those closes did get bearish divergence and we got a correction as a result. So now we need to, of course, wait until we see another high, if it's a lower high, by the way, there would be no bearish divergence off of the most recent high, but there could still be bearish divergence or weakness off of this read over here for RSI, right? So if we were to get a lower high, as it relates to the most recent high, we're still above the 73,835 high. So if we got a lower high and a lower high on our actual RSI here, we technically still have a higher high than the 73,835 high and a lower high on RSI. This would result in another drive of bearish divergence. That would start to show some weakness, right? But it's still, I like 3. Many people do, many analysts that come from traditional markets, many in crypto markets look for about 3 indications of bearish divergence. And we're coming off of, potentially setting a higher low on a closing basis. So I would still evaluate this as strong. Now, when we go to the weekly, we can see that we had some weakness that was showing, and I'm going to show you, this is taking into account trend and support and resistance areas here on the weekly. If we're going to compare this on the weekly to what happened over here and why I was bearish on the all-time high. Well, especially when the weekly close came in. But, the daily made a new all-time high. And we're going to go take a look at the daily. And we're going to see kind of what what the candle structure looked like. And then we're going to start pulling in our volatility metrics as well to gauge things. In this case, we saw a higher high weekly close, and then we saw the then all-time high at 108,400 essentially. We had a nice higher low put in, and then we went up and made a new higher high at the 109,360, but we made a lower high close. When you see something like this, this is the first sign of weakness. And then the criteria becomes, okay, when we see this lower high close, even though I put in a higher high, we're getting some mixed signals. Showed the price could push up, but it could not close above the previous close, which was at 104,445. So then the criteria becomes, okay, if this paints a lower high close, we have to be concerned that we're at least getting a correction back to this low. And if it breaks, then we're looking lower into, roughly the high side area over here, which did get, of course, front run. But in this case, the criteria was close below the low of the candle that put in the higher high with lower high close. If we close below it, in that case, it was $99,416. Then we are painting a lower high close with a higher high swing, and we're likely looking at the bottom side to get tagged. We did see that after the close came in. We saw the bottom side of the range over here get tagged by that higher low structure and the higher low swing on the weekly. Then shortly thereafter, things consolidated. We got the big old move down, closed back inside, and then the real move down to kind of fill out this wick. And you notice something here on the weekly that I want to point out here. You notice on the bottom side, we have this big swing down here. No closes below. Interesting, huh? This was at 78,167. This was one of the key areas that I had marked out on my daily chart where I was showing price that if it didn't close below here on a weekly, I wasn't looking for another big weekly push on a closing basis down further. We could keep swinging, but if we saw closes coming essentially above $78,000, then we have to evaluate this structure setting up for a potential trend reversal. And of course, we had the 78,100 area low there. Bitcoin then swung it and then put in a lower low. So we went from higher high to lower high close to lower low. And then we got a lower high. We came back down and we saw that we got another lower low close with a lower low swing, but we had not closed below the 78.1 region. And that then opened the door for the bulls to try to run things back. And the bulls ran. They ran from one side to the other very, very aggressively, 42%. And in this case, we're right back at the high side zone, right? And even better, we got a nice close, or we're showing strength above the 102.5 level with this nice close. We even got a nice, we recovered back above in the strong half of the Bollinger Band set. So even the most conservative traders could look at some of the opportunity that occurred here for essentially 2 to 3 weeks in here around the 93 level. It's about 2 weeks or so that it oscillated around there. With some swings above and so on and so forth. But once we saw that in the strong half of the weekly bands, we then pushed up even stronger above the upper first, thus giving us the bias that as long as price is closing on the daily above the upper first, especially if it's closing above the weekly higher high close, this was a lower high close relative, but it's still a higher high than the last higher high that we had. Higher high swing to the lower high close, where in relative to this higher high close, we're just kind of in a zone. And that zone is essentially 102.5 to the 109,360 area. So price is strong. Well, it's in here in terms of trend, support, and resistance and all of that. But we also need to understand that this was just a downtrend break. So we do know that at some point, no matter how high price goes here, that it will correct. And the most statistically likely outcome is to start looking for higher lows or equal lows as it relates to the last lower low structure, because we have just higher highs now. Otherwise, this turns into a deviation, drops the lows, and goes and tests this area for real. And so one of the big things that we have to evaluate is we just looked at the monthly, and the monthly is in a beautiful uptrend, right? It's in the, it's right around the monthly area that we would want to see another higher low close come in. We even have price trading above the monthly closing all-time high at 102.5, right? So that would be strong. So in the context of the monthly, we're still strong, but the weekly, while strong in this area and could continue on the lower term timeframes that lead to the weekly, we still need to be aware that structure needs to be built on the weekly. So we have a few things that we can then extrapolate from there. If price is going to continue to push up in the strong half of the bands here above the all-time high by the upper second, I'm looking for, roughly 115 to 116 around that upper third. If it really wants to kick things off, we can start getting into Fibonacci numbers for the local range. And we'll see that this is where we can start to pull fibs, which are, we've touched on this a little bit, but one of the big things that I look at is the 16.8% above the 109,360. 16.8% or the 1.168, which is literally just 100% plus 16.8% is right where the upper third is by $116,500. Above there, we get to 121, 128, and then there is a nice 138, and I'd even call 140 to another zone up there by 150K. Can price still continue to march up here? That's what we have to start evaluating for strength on lower term timeframes like the daily. So we're going to go ahead and take a look back at the daily, and we're going to look at a few of the things that we started out with in the very beginning. We have a nice uptrend, right? And we have beautiful consolidations within the range here, right around this consolidation is where price kind of stopped and started to fill out that area. We have a weekly higher low that I'm going to turn on my normal support and resistance charts that are already mapped out, so we don't have to do it all over again. But we have some reference for where price just took off of the 93.5 higher low close on the weekly, which is this area here from the weekly. We have the 93.5 to $89,000 here, and we can mark that out actually, so we don't have to go and turn on a mess for the charts here, but we can say that this is the other big area to pay attention to. You can see how perfectly the weekly kind of legged up through that area. Now when we go down to the daily, we see how the daily tried to test the bottom side, the high side of this lower high on the daily and weekly, pushed up through, sat on the weekly here, deviated some of the local areas of interest prior this prior consolidation before the breakdown, and then showed strength every time it hit this in the strong half of the bands, and then legged up to the next big area. And this next big area, which I have a little bit more refined in some cases at 101 to the 104 area, which is roughly where price is tried to hang out on the daily. But we're looking at strength here. So the major zones are fine for us. And as long as we're above that weekly zone, especially coming into a weekly close, the high side is more likely than not. And we can kind of gauge this by looking at, we don't have any regular bearish divergence building on this move. We are getting some warning signals that this could possibly be, close to a larger correction than not in terms of momentum. But one of the things to keep in mind about momentum, especially stochastic momentum or regular stochastic momentum, is that it can remain in the overbought or above the 80 read or in the oversold zone for longer than most people have patience. Which means that it typically gets nice bullish resets. And if it's in the bullish half, just like RSI, essentially above a 60 to 62 read, it's looking fine and it's in the strong half. Anywhere above the 50% is usually considered the strong half as well. But we have to take the confluence of trend, support and resistance, volatility, and that momentum all into play. And I love bands for this. Because if we're in the strong half of the bands, here's the beautiful thing. If we're in the strong half of the bands above the basis, we can even come down to it. What would that be a retest of? Well, locally, this would just be a retest of the actual prior consolidation highs, right? So we have, an area of interest locally on even pullback. So if we start to lose 102.5, we even have local structure that we can look at. That's, right below there, we have the upper first. If it starts to drop that, we looked in the lower term timeframes, we look to, the Monday low at 100,700. If it starts to drop that, next big area to look at is the basis, which is the top side of this prior consolidation. And you can be generous with this as well, especially on a daily. You can even take the top side of the consolidation to that high as a zone of interest for yourself here, because one of the things that we're looking at is trend, right? And we have this nice uptrend here. We had the big bounce off the weekly here. We've got this daily zone where we have the high side of the consolidation. We had a little pop up, and then we got a nice higher low right off the weekly. So where would I want to see strength if price starts to fall through the basis? Well, I would like to see closes remain above it, but if it does start to fall through, fair game between $98,000 and $95,000 at the top side of this consolidation. Danger if it starts to drop below there, because then it's doing what? It's putting this higher low at risk. So there's the possibility of a trend break. And that's really how I gauge this. The other thing to look for is when we're looking at strength and weakness, well, if we were to take out that higher low, that's showing a little bit of weakness in price, because then we have to evaluate a possible trend shift, right? And that would be weakness for the bulls in this area. So if we were to come up and then take this out, right, and maybe even go into the bottom side of the supports there on the weekly, then we have to be aware of a possible lower high and then a lower low, right? So a new trend to form. So the real thing would be lower high, right? Because if you get a trend break, just like on the weekly where we got a trend break to the upside, we need to see higher lows or equal lows. On the daily, you have to be aware that if we get a trend break, then the most probable setup to be looking for and watching carefully, not predetermined. You don't say like automatically it's going to be lower highs from here or equal highs from here and it's all over, but lots of people do. But we'd say, you know, lower low, we have to be aware of possible lower highs in the next push up, whether it's here or lower or equal highs. And then that's the trend reversal setup on the lower high or equal high, even if it was down here, right? Or if it was up here, doesn't really matter. The setup would still be one of be aware that this could turn into a reversal setup, because we would already have a lower low in place. The reversal setup, once confirmed, is the actual bearish reversal setup. Confirmation would be back below the lower low. Now we have weakness and price action to the downside. But for traders, what are we really looking for? We're looking for consolidation to expansion, right? So we're looking for compression to expansion or consolidation to a move getting going. And this is where the real money is made on both the long and short side. Because look, if you're a trader and you're in this game to do TA and you get to the point where you are confident in how much you know and you have enough practice under your belt for trading, you can trade any setup, and you should trade any setup, because what you're looking for is volatility and price action, because that's where money is made. And that is where you want to see strength in a move. And you're not really looking at the weakness and overall price action in terms of context of bullish and bearish trends. Doesn't really matter. It's about strength of the move itself. And here's where we can go to the lower term time frames and see some strength in moves. And I'm going to point right back to after coming off of some consolidations. We'll use this one as a beautiful example on the 4 hour. So we were knocking around. We went and retested the weekly after breakdown. Then we were sitting on some daily weekly levels here. We saw a nice compression here and then an expansion. We saw a beautiful compression here and then an expansion. And then we got some of the most perfect setups, which I absolutely love, is we get a nice long consolidation and then we get an expansion. And this expansion kicks off on a close above the upper second standard deviation. So volatility expansion begins to the upside. It also broke out of the consolidation at the same time, retested, and then just continued on this expansion. That means that once we start hitting this expansive state, this is strength of the move. In this case, strength of an uptrend, right? And then we saw a nice big consolidation again. There was a nice little expansion. We didn't get the continuation above the overhead resistance, so it didn't break out of this zone that we defined. And this is the same zone if you look left. It was actually this zone. We didn't break out of this zone over here. So we did expand to some of the important areas within the zone up here, like this high at 99.5 or so, just shy, coming in with a high of 98. So the conditions were pretty clear. If we hold this zone down here, anytime that we see it try to expand, so we got a little expansion up to the top side in the context of this consolidation on the highs, didn't pass it. So it didn't break out and show strength above there. It also then reversed right back to the lows on a key level, but did not break down below it. So it was just showing signs of more consolidation with some higher volatility periods. But then it ran to the top side again, put in a nice higher low. So we have a trend reversal setup. confirms a trend reversal setup, shows strength above the most recent highs. Also on this candle, which I'm going to highlight here, it's all the way at the top of your screen, sorry. We're going to go ahead and throw a horizontal here. On this candle here, which is really, really interesting, at 99,200, it was showing strength above the most recent consolidation, and it was hitting expansion again above the upper second standard deviation after holding support at a key level on the weekly, and then it was right at the top side of these highs here. So this was strength into the local structure, historically consolidation structure over here, and above the local structure rather. So the next area would be, okay, if it can break this, which then you see on the 4 hour, it did, and it flirted with the break and it held it. The next big area was the big weekly zone overhead. And that's right where, so we showed strength on expansion into that weekly zone. Now we're back in a consolidation. And you can refine this consolidation on some levels. For this, I'm actually going to reference the chart that I had made previously. And that is the local support and resistance chart. This is a daily zone of interest right up against a macro fib, or 27.2% above the prior cycle high at $69,000. And in this case, we had a zone between 101 and 104. We did break out above 104 and made a good push towards the all-time high on a daily. And this has become an important zone. So in the way that I evaluate this, even on lower term timeframes, is we see that we got expansion into the zone and now we're consolidating. So what am I looking for if it was going to be bearish weakness but strength of possible trend reversal setup? Closes below the lower second, then I start looking to the bottom side of the zone at 101, 175 to the most recent low, 100,700. If we show strength of closing below the lower second and dropping that low, then I'm looking for this consolidation to result in further tests down into this area again, possibly even the entire consolidation is in play, right? And that would start to look like, hey, you know, we have to be aware of what happens from here, but that would be expansion down into these key levels for this most recent consolidation. Then we have to be aware of the same thing that I just pointed out on the daily, a lower low setup possible, you know, based on conditions, or does it hold up and try to create equal lows, so on and so forth. Now to the upside, even on lower term timeframes, if we start to see closes back above 104, now we're looking to the local 4 hour structure, somewhere around, you know, 104, 800, 105. If it starts to push above there, we have to be very keenly aware of where the upper second standard deviation is. If we start to close above there, then we're likely going to test the most recent higher high up here to the bottom side of the zone by the upper third at that 106. What is the actual number there? The 106. Why is it actually not showing me the number? I think it's 106, 136. Yeah, there it is. Now in this case, any closes above there, we're looking at 4 hour expansion in to fill out the rest of the zone, which is essentially 106 to the all-time high and possibly higher. So that would start to show strength to the upside. And we can get strength to the downside, often known as weakness in price. And I'm just going to kind of cut it there, because I think that anybody that's watching this, they're going to have additional questions. And I think those additional questions are going to be fleshed out the more that we continue to talk about this and start moving into trade setup identification. Because this concept isn't any different than the things that we've been talking about the entire time, but it's about getting in the mindset of identifying the strength of a trend as it relates to utilizing the Bollinger Band setup. You take into consideration all of the other factors on longer term timeframes to your lower term timeframe thesis. And then from here, in terms of setup, we can continue to add things. Like we can look at RSI, we can look at momentum. but we have the bulk of the information right here in front of us. Those other things are just giving us, a better feel for the probabilities of the setup. And that's what we want to start talking about as we move into next week's Learn TA with Landy.
Awesome stuff, man. I still find, like, here's the thing. At the end of the day, nothing's going to tell you exactly what you should do.
Yep.
Like, it can always go counter to what it looks like. So you're just trying to position yourself to make the most educated guess out of potential educated guesses. That's why you always want to hedge. You always want a stop loss and or to make sure that you're getting the numbers right, because it's not an exact science. But if you have all of this stuff here, it's you're more likely to get it right way more often than getting it wrong.
Yep.
If you know what you're looking at.
Yeah, because what you're trying to do when you're trading is you're trying to capture a move in progress, right? So whether that's to the upside or the downside doesn't matter. So it's about identifying probabilistic setups and defining criteria that meets the confirmation of that setup, right? And that's going to look different on different time frames for different traders, right? And it's also going to look different based on your your risk profile, right? And your appetite for risk. So that's the big thing to really understand, is that there is no silver bullet. If there was a silver bullet to technical analysis, price wouldn't actually move the way that it moves, because everyone would use it and price would just be decided. And that's kind of, and the reason why there is so many systems for trade setups is because it's about doing the math to find the most probabilistic winning setup in both directions. And when you're actively learning to trade in this manner, you're setting yourself up with the core thesis that you would have in order for you to set the conditions for your trades. But in the future, these might be the conditions that you give to an AI that does the trading for you. And everyone thinks that AI is just going to dominate, but they have to be trained for the setups that you identify, because it's still a free market and all of these AIs will also be trading against each other.
And hopefully they're not hallucinating while they're giving away your bag.
Yeah, right. Oh my gosh. Yeah, that is something that is a little scary. I'm starting to dip my toe into some of the AI trading stuff, and I don't have anything to like announce or anything like that, but there's some cool stuff out there, and trying to train one of these things to replicate the way that I do things is very, very, very difficult. And I don't think that AI is there just yet in that regard, where somebody who has a lot of experience trading can just give it all over to the AI. We already in traditional markets use algorithms and algo trading and high frequency trading to do things, and ARB and like all this stuff, squeeze profit out. But there's still active traders and liquidity providers, otherwise known as market makers, that have to evaluate the markets, because the machines can't do everything for you. But the algorithms can define some of the criteria, preset some of the criteria for you, and then you have to refine that set of criteria. And I think that that's a good symbiotic relationship where we're at right now. And we'll see where things kind of go in the future.
Right on. Yeah, I agree. It's a tool, but you still have work to do with the tool as far as the AI goes. It's just the machines give us a lot more capacity to work within ourselves, but you still got to do the work yourself. GPSC is asking, what do you think of token metrics, Landy? I'm not sure.
I'm not sure what he's referring to.
Yeah, I'm not
Like
sure what that,
Tokenmetrics, the platform.
is that a platform?
Well, there's a token metrics indicator. There's token metrics platforms. There's all kinds of stuff. He might be referring to. Let me look here, or he can tell us in the chats there.
What do you mean, GP? Clarify that question for us.
I'm assuming he means the platform, which is the AI platform.
I never heard of it.
Yeah, so Token Metrics is it's like an AI trading platform. I don't know enough about them to tell you. And one of the big things is I know that they've they have a pretty robust AI system that can do many different things, and this is where I don't know if, without getting in there and actually diving deep, I don't want to, for instance, I don't want to be subject to the bot. I want the bot to be working for me. So I don't want it to be picking. I want to configure it in the ways that I do things to have it replicate what I do. And that's something that I just haven't found to be viable at this time. But platforms like Token Metrics, they do, they're everything. Like, it's an everything platform, right? Because the AI can analyze all of the fundamentals for you and historical trends and kind of the areas of interest, and it can predefine a lot of things for you. And then it can also, come up with a strategy to take advantage of that. But here's the thing. If you don't understand how the fundamentals work and what it is that you're looking for, you're not going to know how to tweak that thing to get it to do exactly what you want, right? So you have to have a robust amount of knowledge, and then you have to evaluate whether or not that strategy is going to be one that is good, right? A lot of bots like to use, moving average strategies, which I'm not the biggest fan of. Even though I literally have the basis band on the screen there for you, they use variations of different moving average strategies that I think are lower hit rate, in my personal opinion. There are some higher hit rate ones, but they really lean heavy into those strategies. A lot of the AIs seem to have taken that to heart in their training. Realistically, we've seen we've seen a lot of different stuff in this regard when it comes to AI. For instance, the Lorentzian, I don't even know, classification.
Lorentzian.
Yeah, this one's got a T in it for some reason, but Lorentzian classification stuff. We've seen this stuff for years and years and years. And realistically, it depends on what the goal is. But I do think that these kinds of platforms, whether it's that platform or another one, they can help people who maybe don't have a robust amount of knowledge, and they can maybe have the AI just do it for them, and it would do better than they would do. But if you don't understand how this stuff works and how to read the auction and how to define criteria, it becomes very hard to refine that bot strategy for you. And I still call them bots because that's what they are, until they become sentient and take over the world. In which case we won't need to trade because we won't be alive. Sorry, I got a little doomer there at the end. My bad.
Well, you know what? It is we're all kind of living with a constant existential crisis, and we learn to ignore it actually throughout most of the day. So, It's a helpful reminder because sometimes it actually relieves some of the stress too. All that trading functionality and all that nitty gritty and everything, at the end of the day, it won't matter except for what you leave to your family. and then they'll be dead someday.
Yeah.
So it's just
Look,
it's
when
really,
the Terminators start trading your portfolio into millions, and then you go to withdraw it, and they tell you, "No, it's our money now," and then and then they, like that's gonna be the scary days. All right, so until then, I like to manage my own trades. So now, look, I will tell you that I'm using AI more and more to give me a better picture of stuff like what we have with platforms like this. Here, I'll just share this tab real quick. When it comes to fundamental data, like I use AI to aggregate all of the market data from CryptoQuant now, because it's just easier instead of me going through, okay, where's the premium gap at? Okay, market cap is here and average cap is here. And let me go ahead and look at the exchange flows, and let's look at the flow indicator. So like instead, what I'm doing is I'm plugging all of the data in, and and this isn't currently logged into it, but on the institutional account, just pulling this data down into the bot to have it just aggregate this stuff for me in a very simple, paragraph or two on what's going on in this stuff. Like, okay, exchange reserves, continued, they moved from, X number to X number while the premium gap was maintained. And like, so I have the AI kind of aggregating a lot of this information, so I don't have to manually go through it. And I think that that's very, very helpful. So we'll see where it goes from there, though.
Yeah, the tools definitely add some value. It's just a matter of you still have to verify, or you're trusting it to some capacity. Just as an example, like every day I do the morning news and I use ChatGPT. I've been using ChatGPT for a couple months now to help aggregate the news stories and write my summaries for me and help me with the daily tweet thread that I do and everything. And many days in a row, it'll be great. And then all of a sudden one day, it'll just like give me a bunch of made up stories with links that don't actually go anywhere. It's like,
yep,
that's not real. That didn't actually happen. Why? How did you come to the conclusion to just make shit up for me? Like, are you trolling? Like, I really think it's trolling me sometimes. I'm not sure what the hell's going on, but that's when you're talking about trading. There's a whole nother, like, my risk factor here is I might report a story that's not true, which isn't what I want to do, but it's not really going to cost me anything significant. When you're getting into the realm of programmable trading, that could go bad really quickly. So there's still a lot of human interaction that needs to be done. I don't think that we can at some point, like, people are talking about like AI agents that are hosting shows, and then, well, isn't it AI agents that are watching the shows too? Like at some point, like people aren't gonna, if they can't be it's getting really weird. The world's getting weird on that, man. But
it's okay. I mean, this is the rock and roll, that newfangled rock and roll of our generation. What I think that for as much doom and gloom as might be out there, and there might be isolated incidents of AIs not doing what we want them to do, we got to remember they were created by us, and their data is trained on data that we've created, right? So that is the limiting factor. And Jensen the other day, as shared by, was it on Dave's ATC? When was this? Maybe not. I forget which show it was on, but I think it was ATC. Had to have been, right? Where he was essentially talking about robotics and AI, and how the AI doesn't know if you roll a ball off the table, that the ball didn't just disappear and doesn't exist anymore, that it actually just fell off the table. It's on the other side, right? Which is reassuring that Jensen is talking about it like that, because that means that we have a very, very long way to go before the Terminators burst into our house and steal our ledgers and treasures and jade wallets and cold cards and all that kind of stuff. So we're safe for now. And I think we'll be safe well into the future.
Yeah, I think so too. Always a pleasure, man. I know you have some stuff, and we probably went a little longer than you were planning.
That's okay.
It's a little bit past the hour.
I'll always take the extra time with you,
from,
Peace.
GP. But Crypto Landy, you guys should be following him. If you're not, give him a follow on X. He does analysis 3 times a week on what's going on in the Bitcoin market and broader crypto market every Monday, Wednesday, and Friday, plus Tuesdays. Every Tuesday, he comes here and he's giving of himself to teach us the basics of technical analysis so we can do our own research and figure it out on our own. And that's very empowering. So you guys should be following him. Download install the Landy bands over here from TradingView, so you can use those in your analysis. And make sure you're tuning in to DeOrganized Monday through Friday in the mornings, Learn TA with Landy Tuesday afternoons, and Monday through Friday in the evening with GPSC. And we also have Bitcoin and Beyond on Thursdays with Melanie. We will be out in Bitcoin Vegas in 2 weeks. Official, acknowledged media with press passes to the main event. So we're super psyched about that as well. Thank you all for tuning in today. And Landy, thank you. You have a great day. I am Peace Love Music. He's Crypto Landy. And this is Learn TA with Landy. I hope you all enjoyed it. Y'all have a blessed day.
Take care. Peace.
Thank you, sir. Peace out.